Hello, friends. Welcome to the Weekend Investing Stock Market Weekly Review for the week ending 24th of January 2025. We've been down and out since October. This last week also has not been very encouraging, but I'll talk more about that later. This series that don't get trapped in weak stocks is on. We are doing this every Sunday now, and it basically showcases how momentum investing can keep you away from weak stocks. We will identify the weak stocks right now and in different categories, large cap, mid cap, small caps, and showcase their performance. And also tell you that there are other stocks in the same categories which are doing really well that you should have been going for. So it's basically an educational series where gradually you can uh, learn the techniques of how to convince yourself to move out of stocks that are not doing well for you. That itself is the biggest hurdle for a lot of investors. So this next episode goes live on 26th of January. From our research desk this week, we had all these fantastic content pieces. How long will you remain stuck with non-performers? GDP versus market growth. I mean, the disconnect there. Uh, how many reasons do you need to consider gold? Don't be blinded by brands. Dollar is getting stronger. How does it impact our markets? How long the IPO rush will last? Gold in US dollar terms, how it's performed well beyond what people expect. Uh, Market volumes coming from just two cities. That was one story that was really very inquisitive, and the magic of asset allocation. These were the research desk pieces this week. You can get all this and more from the Weekend Investing app, from the Weekend Investing blog on the website, or you can also go for the newsletter that comes into your mailbox every day. Disclaimer, please read the disclaimer fully uh, and do subscribe to the channel. So let's go to the Nifty chart. Nifty, these are the 50-day and 200-day moving averages on this. You can see for the last 2 weeks, Nifty has been extremely constrained within the 300 point or 3 to 400 point range. We've broken below this important bottom, but so far there is no waterfall event that has happened below this level. So we are just about simmering there. I think above 23,400 is where you start to get some confidence back. And of course, below 23,000, there is a black hole. So minus 0.5% this week. The golden cross had happened a few days back. There was another video on golden cross, what it means, and what are the prognosis for golden cross. This week, uh, you can see the weekly chart. The weekly chart also is suggesting that we have broken down from this bottom and the downtrend continues. So essentially, we are in a downtrend. We are continuing down. There is right now no indication that we will turn back up. It can happen next week, but right now there is no indication of that happening. And if we were to spend another week like this without any recovery, that would mean 4 straight down months in Nifty, October, November, December, January. And that has not happened since 2001, I think. So whenever you will have such situations, it means that the market is in extreme distress and it can't continue doing that for too long. I mean, the fifth month and sixth month are extremely low probability months then of a down month. So you will get a bounce, if not in February, in March. Hopefully, I am hoping that we will get a bounce in the next week itself, so that January may itself become a positive month. And for that to happen, we probably will need to cross 24,000. It can happen. I'm not saying it is out of the woods, but it will require some sources to tell us something before the budget, that something good is coming. Although the papers daily are screaming there is no capital gains tax change, there is going to be income tax slabs rationalized, more money in people's hand is coming. Some papers are talking about Modi 3.0. So, I mean, the government is trying to push positive news, but nothing is sticking right now. So, I mean, my thought process is that, worst case scenario is somewhere near here. We are maybe 10% from there. Um, assume that, worst case scenario, we reach here, we will build gradually after that. I mean, after all, um, the market can neither go to the sky or fall to the earth also. So we have to, maybe spend more time just staying invested and not making returns every day. That is the only change that needs to be made. If we see on a long-term basis, in the last 4 or 5 years, we have been much above the long-term averages in terms of where we are in the market. So some maybe reversion to the mean is happening, and in my view, I think most of it is done. That's why I'm saying the worst case scenario is maybe 10%. S&P 500 is doing very, very well, rather extremely well, beyond all expectations. As if Trump is going to bring all manufacturing jobs to America tomorrow. But the market is forward looking. Market is forecasting that good things are going to happen to the US, and S&P 500 is up almost 2% this week. It has closed at its all-time high. The relationship between Indian market and US market is completely broken at this stage. Um, it has happened in the past also many times. The way US dollar has been strengthening, all foreign money, especially, and even domestic money, would want to go there, uh, and not sit in depreciating currencies. But hopefully now the rupee dollar is trying to stabilize at this 86, 86 and a half level, so on and so forth. If you see, the S&P 500 has remarkably gone from near 4,000 levels to 6,000 levels, a 50% jump in less than 14 months. So this is how lumpy markets can be. There is no earnings surprise happening there. There is no, anything of that kind happening here. But liquidity is flowing. So it is all a matter of liquidity. By whatever reason, if liquidity starts to come to India, nothing else will matter. India market will go up. So the government needs to think about it. The government needs to realize that they need to attract liquidity, and to do that, they probably need some reshuffle at the important portfolios, so that intelligent people can come and manage this economy. Gold up 2% this week. 8130 is the gold price in INR terms. So in usually it is quoted in 10 grams. So 81,300 is the gold price. You can see it was 52,000 just in October 2023. So in 15 months, less than 15 months, you've gone from 52,000 to 81,000. That's like a 60% jump. So, I mean, if you don't have gold in your portfolio, I don't know why you don't have gold in your portfolio. This is giving you a market-like return with much less volatility. It is giving you a contra hedge to your equity portfolio. Just because some popular names have always rubbished gold, the data is right there in front of you. I would encourage you to watch the video that we did on Friday about gold and how gold has impacted investors all over the world, and it's not just India. So a lot of folks say, gold in India is going up because INR depreciates. No, that is not the case. Please look at the data. Look at the data and understand that. This is one of the most promising charts for this week, where the dollar index has reverted back to its breakout point. It's down 2%. If it were to break down from here, I think Indian markets will certainly start getting some liquidity and more confidence in terms of going forward. I'm looking for this pivot here to break down, but the breakout point itself breaking down will give some signal that yes, this relentless rise has ended for now, at least. And the entire, I think, thesis is now for emerging markets is which is reeling under the strong dollar. I think this will get impacted, and some semblance will start to come back. So this is probably the joker in the pack for the coming weeks. And as you would have thought, uh, there is always, let's go back to this chart. This was built up since we knew that Trump was likely to come to the office. And this has now exactly peaked when Trump has entered the office. So this is a sell-on news event. This also is very typically exemplifying what is the role of momentum? What is the role of Bhau Bhagwan in the market? The market is doing things before the event happens. The event is just the culmination of the move. So this is likely the top. I'll stick my neck out and say this is likely the top for the dollar, and we might see this coming off, because a lot of announcements are happening. But once the dust settles down, everybody realizes that you can't make America great tomorrow. It's going to take decades. So this needs to be watched. If this is broken, if this turns around and goes up, I think then all bets are off. I mean, in the sense that then it is going to be like a crazy fall for all other currencies, all other markets, because then it is just America till we find the ultimate top. Benchmark indices overview. So Nifty thankfully lost only 0.5%. Nifty 500 lost 1.6%. Mid cap lost 2.4%. Nifty next 50 lost almost 4%, and small caps also lost 4%. So this was the last week gone by. In the last month, we've lost some significant amounts, 10% on Nifty next 50. But if we go, let's say, last 1 year, we are still in the green. So again, my sense is that you've not really reached extremes till the last 1 year becomes red. When the last 1 year becomes red, then the probability is that recovery is within the next 12 months at least. So I think we are a bit far from that. We are still in the excesses zone. Uh, the last 6 months, however, is already quite red. So from that perspective, we will may have to wait more further. Last 3 years have been fantastic. 21% CAGR on mid caps, 18% on small caps, even after this fall. 15% on Nifty next 50. Yes, Nifty is not so great last 3 years, but I mean, other stocks are just amazing. 25% on small caps in last 5 years. If 5 years you made 25, 25, 25, a couple of years we can always be ambushed and still be okay, right? I mean, there is going to be some give and take. You can't have the cake and eat it all the time. So from that perspective, you have to see from the rational perspective. Yes, everybody is hurting. Everybody has lost 20%, 25%, 15%, whatever it may be. But see where you have come from. I mean, it's like a car going uphill, and we had to go up 100 meters. We've gone up 80 meters and come back to 60. I mean, we are still from 0 to 60. We've still gone, right? So it's about perspective, and having the right perspective, having the right understanding, having the right expectation will set you at peace. As long as you are confident that your strategy, whatever you may be following, maybe momentum, maybe something else, you know that your strategy will beat the market, your strategy will beat inflation, your strategy will compound over a period of time. You are going to be in the compounding cycle for next 10, 20 years. There is no worry. I mean, I don't worry about all that, because we are so fortunate that we live in a country called India, which has inherent growth sort of underwriting already there. This is not true for a lot of other countries where that they have achieved some maturity and now they are not able to grow. We are, I mean, it's like you can just be blind and throw darts at stocks, and in over the next 10 years you'll still make money. So we have that fantastic underlying current that is on. We just don't have to do anything very stupid. That's about it, what's required. Nifty sectoral overview. Okay, last 1 week, IT stocks post, I think Infosys and TCS results have done reasonably okay, plus 3.6%. Real estate stocks have been thrashed out. I'm sorry, these are not very clear, but real estate stocks have been thrashed out. I think down like 10% or 12%. Capital market stocks are down. There is a lot of talk about cash markets volumes going down, F&O volumes going down, and from 1st February, I think the lot sizes are changing towards the higher side. So more uh, dampening of volumes may happen. So a lot of capital market stocks, broker stocks, wealth management stocks are going down. A lot of the sectors have remained within a percent. Autos have been down. PSU banks, public sector enterprise, very surprisingly, even running up to the budget, there is no uptick in the public sector enterprise and central public sector enterprise stocks. So yeah, I mean, it's very gloomy going into the budget. Again, if we take the last 1 year performance, only energy and media are down. Otherwise, you can see capital market is up 57%. So again, seeing from that perspective, let's say, 3-year perspective, I mean, you've got 30% compounding in capital market, even after this current fall. So, thoda, matlab, we have to be little rational. 65% is 3-year returns in defense. What is the 5-year return here? 49% 5-year compounding in defense stocks. Even if they drop 20, 30, 40%, I mean, what's the big deal? I mean, you've gone from, I don't know, 100 to like 1,000. So it's a crazy kind of a run that has happened for many sectors. And the excesses are getting removed. You're getting back to normalcy. The rally will come again. See, it is not that anybody should not feel that they have missed out and it will never happen again. This is the biggest mistake of thinking about the market, that, oh, I missed 2000. So people who missed the 2000 rally, did they not make money? Oh, I missed 2003 to 2008 rally. Did the people who came after 2009 not make money? I missed COVID run. Did the people who came in 2022 did not make money? You will get a rally every 3 to 5 years, a big rally, a rally big enough that you will make enough money for your entire life if you play it right. So these are the times to get ready for the next rally. It may happen in 1 year, it may happen in 3 years, it may happen in 5 years, but you have to put your house in order before that. You have to allocate. You have to allocate to the market, even if your allocation is currently bleeding. You have to allocate to different sectors, different asset classes. All that is preparation to be done in this downtime. When the market is going up, nobody's then thinking about, how to do, when to do, all those things. Uh, so this is the Nifty sector overview. Let's now go to momentum scores. So IT sector is the top score across different frequencies. Pharma has come off a bit. It was at high ranks, but has come off a bit. But still, overall, on average, pharma is at the top two. Services sector is at top three. FMCG, which was really bad in the last few months, has stopped falling, and hence it has come up in the relative score because everything else is falling. For instance, oil and gas is dramatically falling. Public sector enterprise dramatically falling. Private banks have stopped falling. You can see here the ranks are improving very fast. Autos have suddenly dipped quite a lot. Uh, and some of these real estate stocks are completely over and out for now. Energy is over and out. Public sector enterprise over and out. So you can see this relatively changing. What has remained green is probably the most uniform, and these two are IT and pharma, for that matter. Is the trend improving or declining? So 50-day moving average and 200-day moving average of CNX 500 stocks. So there are only 16% stocks above 50-day moving average right now in the 500 top stocks, just 16%. So 80 stocks out of 500 are above 250-day moving average, and 31 stocks are above 200-day moving average. This is slightly moving up. You can say it is flattish, but the 50-day moving average had moved up but has slumped down. So there is no uptick right now in the market. We need a move like this to really say that the trend is improving. On the indices, you can say that let's check 200 DMA. So 34% of Nifty is above 200 DMA, 34% small caps, about 30% in all of them. Nifty next 50 is that odd one out where very few stocks are above the 200 DMA. On the 50 DMA, very, very poor. 8% Nifty stocks are above, 6% above Nifty next 50. So large cap is completely decimated. Small and mid cap still has some component which is above 50 DMA. And if you'll go to 20 DMA, you still have some green shoots that are happening across the board. So again, I mean, it is a very poor situation to see 200 DMA stocks only one third above 200 DMA. Below 200 DMA, I would not even touch the stock. From a trend perspective, you may see it from a value perspective, there is no end to that. But from a trend perspective, I would not touch that. If we see the 200 DMA on these various sectors, we will see that IT stocks, 90% of them are above 200 DMA. That tells you that the opportunities right now especially for discretionary traders to look for setups, is there in IT, pharma, private banks, these spaces, and others are quite low actually. Energy and PSU banks, there is no stock which is above 200 DMA. And if you go to very short term basis, you can see IT still has 40%, which are very strong. Above 20-day moving average would mean a stock is reasonably strong and trending up. Again, here IT, pharma, media services have some stocks that are above 200 DMA, and oil, gas, PSU, PSCs are completely out. So this also shows you that there are a couple of sectors, and probably because money is moving towards defensives, towards IT, towards let's also check FMCG where it was. So FMCG is 33%. So yeah, I mean 1 out of 3 stocks are above 200 DMA, and this 1 out of 10, 1 out of 8 stocks are above 20. So FMCG has fewer opportunities right now. So if we see the total 500 stocks, we have Golden Cross on 40%. What is Golden Cross? 50-day moving average above 200-day moving average. We have Death Cross on 60% stocks. So this is also almost evenly divided. If we see Brutal Strength, where price is greater than 25-day moving average, greater than 50 days, so uptrend is there. 5% of stocks really have a really good strength in the market, and 44% stocks have really bad downtrends. Good downtrends, bad uptrends. Um, if we see the uh, sectoral strength and weakness, you can see here, let's say health services are having 91% stocks in health services are in Golden Cross. Health technology services, all these sectors have a very high positive Golden Cross. And absolute strength is also there in communications, non-energy, consumer durables, producer manufacturing. Here, some stocks are there in these categories. A lot of categories have no stock which satisfies this condition. So this is like a more detailed, uh, going into each finer sectors. This is even sub-segments of the earlier sectors that we choose for finding momentum score, etc. You can see retail trade is 0. You can see finance stocks 2%. And if you will see the weakness, you will find huge weakness in these transportation stocks, utilities, energy, minerals, distribution, so on and so forth. FII DII stats. FIIs continue to sell. There's nothing new here. 4,000-5,000 crores get out of the market every day. DIIs find 3,000-4,000 crores to put in every day. The numbers from second week of January seem to have reduced quite a bit. We are now down to 3,000-4,000 crores. And while the going is still good on the domestic front, I don't know how long the domestic investors will continue to pump in money. Domestic investors in the last 1 month have invested 82,000 crores. FIIs have removed 76,000 crores. So it is the battle of FII versus retail, you can say. Yet the market continues to bleed. That's all I have for the Weekend Investing Weekly Report. I hope you like this content. Our team has really worked very hard on this to improve this content. Please do appreciate their effort by subscribing to the channel, writing your comments on this, and letting us know which of these data points you liked, which you think we can let go. I mean, why do efforts if that data point is not making an impact on your thought process? And I'll see you next week. Happy Republic Day. Bye bye.